Welcome back, and you're watching Business Lunch on CNBC TV 18. Now let's focus and talk about Embassy REIT. They reported their third quarter numbers marked a 13% rise in terms of distribution and a growth of 9% in terms of EBITDA. We do have the management of the company joining in with us, Ritwik Bhattacharjee, who's the CEO at the company, to discuss about the quarter that's gone by. Ritwik, thank you so much for joining in with us on the show. It's a pleasure having you on the show. I want to just talk about the net operating income guidance that you've spoken about for FY25 of 3,280 crores, as well as the DPU guidance of around 22.7 rupees. Now the numbers, we're almost through with the year, but is this something that is achievable? And, are you on track to meet the guidance right now?
Yeah, first of all, Vinny, good to be here, and thank you very much for having me. Let me sort of put the performance in context, because your question, I think, is a lead-up question. We delivered effectively the highest revenues, NOI, and distributions that we had on quarterly record. In fact, our revenues crossed 1,000 crores, so this is effectively tracking as a 4,000 crore business. The DPU growth of 13% growth is effectively what the market's been waiting for. And I think all of that points to a very robust environment for us, both from a leasing perspective, as well as sort of the overall demand that we're seeing for our premium product in commercial real estate. So with that, I feel extremely confident that we're on track to deliver our guidance, both for leasing, which is 6.5 million square feet, that's upsized leasing guidance for FY25. And conversely, all of that also flows into us absolutely meeting the NOI guidance that we put out. We did put out a range of around between 3,215 crores to around 3,345 crores as a range, and we'll certainly fall very comfortably in that.
Absolutely. But, for next year also, do you think, you would like to give us some numbers on that front as well? What should we be expecting in terms of the NOI guidance or anything for FY26? Do you think this growth is sustainable?
It's premature for us. We've always sort of set the trend in making sure that we look out as far as we can in our business. But I'll say this. I couldn't be more excited about what's coming up in the upcoming year. Calendar year 2024 was a record year of absorption in the Indian office market. We expect the same tailwinds to continue in 2025, and obviously financial year 2026 should reap the benefits of that. For that, we have a development pipeline which is primed and ready to lease to GCCs. We've got 1.4 million square feet. We're actually delivering in February. Beyond that, we've got 3.2 million square feet upcoming for FY26. And really, all of this points to just us, catering to the immense demand that we're seeing, particularly from GCCs and effectively the world's best companies that are looking for all the talent that's available, particularly in anchor markets like in Bangalore, in Mumbai, in Chennai, all of which are markets that are running at over 90% occupancy and will continue to be massive growth catalysts for us. So I can't give you an exact number of guidance yet. I think we'll have probably more to say in the coming quarters, but really could be more excited about the business.
Absolutely. Ritwik, if you could just give in some color in terms of the trends that you're seeing also in terms of your leasing side or any demand side, an indication that we could get in from you in Q4, how that is shaping up.
Sure. So just if you take Q3 and just even the quarters before, this has been a very GCC dominant business. So we lease approximately close to 70% was by GCCs, which continues to, I think, be a trend that's going to be on an exponential sort of multi-year cycle of demand. Secondly, we see a lot of demand continuing to come across a variety of different sectors, be it, banking and financial services has always been a staple in our portfolio, but we're seeing demand from engineering, manufacturing, technology. I think, even if you sort of throw the words AI into it, and you think about every single piece of architecture and business that people are doing inside our parks, there's just a consistent theme of, people across sectors, clients across sectors looking for space. The second thing I would say is that a lot of the demand is effectively non-SEZ, which continues to be sort of a theme that is playing out. We've actively sort of denotified and demarcated over 6.4 million square feet. And that's something we're just going where the demand is. So over time, over the next few quarters into sort of the next, call it 2 to 3 years, I think this is just the start of a multi-year early cycle for Indian office.
Okay. On that positive note, Ritvik, we're absolutely out of time on this edition of Business Lunch. But thank you so much for tuning in and giving us those insights in terms of overall trends, as well as what to expect from the company in terms of meeting their guidance. Also, is what we're watching out for and better outlook going forward. Thank you so much, Ritvik, for joining in with us. That was the management of Embassy REIT joining in with us on the show. But with that, we are absolutely out of time. So thank you so much for tuning in. Up next, your Midcap Radar.